Okay, so just a very quick catch-up call in respect of what we've experienced this week. Again, we'll do a very quick question and answer session in between the explanations that I'm giving. Try and kind of break down and run through exactly what my impression was before the week started, why I basically formed that impression, what my bias was going into things going forward, and then how we kind of analyzed as the market kind of developed throughout the week. So we can see that the initial bias that we had from the forecast was where pro-trend bearish. We can see that's being very well respected. Broken lows here, the market wicked up, taken lows further, and it's respected the highs that were created to create that turn in bearish bias. Even though the market has come back up and tested areas of supply that were left behind here, we can see that it has respected the highs and therefore it continues pro-trend bearish at the moment. When we come into the weekly candle that we were looking at for this week, the previous 3 weeks, which was the entire month of March so far, we've kind of seen a bearish push, and it's actually come and broken a weekly supply demand candle that was left behind here. So this candle came in, the market came in, respected that candle, rejected out of it, but wasn't able to then take highs as it kind of broke out. So it showed us that this demand was not strong enough to turn the market in the opposite direction. It faltered, took highs, respected the supply that was previously created to take these lows, which is this supply up here. Okay, this supply was taken, it broke low again and continued to break low. So now we were looking for our next area of interest in terms of the buys that possibly the market was going to reach for, and it's this weekly candle that we tapped into tail end of 2 weeks ago. The market then reacted out of that last week, and the week just gone past, we wanted to see how the market then continued to push out of this zone to see whether this demand candle lying here that created this push to the upside and took all of these highs was strong enough to then obviously break the trend that we see that's bearish at the moment. Now we can see the reaction out of that zone. When we go down then onto the lower time frame on the daily chart, we see that obviously the market's come in, it's respected out of these zones, and then it's kind of started to consolidate in areas where liquidity is lying. So one of the key factors that we look for when the market kind of breaks out is it going to target a fair value gap, or is it going to target a supply candle that kind of moves the downside? Very clearly here we can see equal lows being left behind on the daily time frame. The market's broken low. From that, it's taken all of these lows that are sitting back here. That's a liquidity grab. The market's then come down further, tapped into the weekly demand candle we were speaking about, and then it's reacted out of that weekly demand and gone back up to tap into the fair value gap. Now, the beauty of this is a textbook setup to me personally for this market to now sell off in a big way. Okay, so what's happened on the higher time frame is the market's come in, it's basically taken lows, it's taken an area of demand, reacted out of that area, come back into an area of inefficiency, specifically a higher time frame fair value gap, and it's now rejecting out of that zone. We want to see this continue, and I personally do think that this now is an indication that this market is actually going to sell off quite heavily in the coming few days. So that's my bias for the week ahead. And if we go down onto why the week has transpired the way that it has, we'll break that down now as well. So what we can see is that as we came into, if I pull up my calendar so I know exactly where we sit. Okay, as we came into the beginning of the week, 20th, we're in at this point here, 17th, 19th, 20th. Right, so this week, last week basically ended at this point here. We started the week again. Now, when the week opened, we wanted to actually see on the lower time frame where we were sitting. So we can see when market opened on Sunday into Monday, we actually have Asia going bearish. The market then basically respected the demand candle that was down here, took Asia lows, filled this fair value gap, which took interim highs here, showed us an intention to go bullish, came down, took the demand candle, and then pushed out of this to take Asia highs, interim highs, and the previous high as well was kind of left as equal highs above. That's a very clear sign then the market wants to come back to this area. So when the market left behind these equal highs, we're looking for the market to then return to this zone to either take those highs or reject from this area completely. So as it came back down, again, there's inefficiency back here. We can see the wick that was left behind as part of this move tail end of last week. That wick was not taken when the move occurred in London of Monday. And when the market came back after leaving back equal highs, it actually liquidated the early buyers. Now, when it liquidated the early buyers, that's when the major move occurred. And this, I believe, was 174 pips from what I recall. Yeah. So effectively, it's 174 pip that move that occurred on the projection bias that we were actually looking for in the forecast. So when I did my forecast at the end of last week, I said that we were possibly looking for a tap down into this area of interest that was inefficient wicks that were left behind to then see the market go bullish. Now, it did happen, but not in the way that we anticipated. However, the analysis and structure are still there. So we can see that the market has shown us interim highs getting taken on Monday. It leaves behind equal highs. It comes back. It takes an area of liquidity, which is the wick at the bottom. On the lower time frame, this will be a demand candle. And then it rallies out of that massively. So if we go down to the 30-minute, that's a bang. That wick itself on the 1 hour, which is I've mentioned a couple of times on my videos, the wick on the higher time frame almost always ends up being a candle on the lower time frame. Okay, so that is a demand candle that was kind of tapped into at Asia, and then as soon as Frankfurt opened, the market kind of rallied out of this in a very big way, and a massive move on Monday of at least 120 odd pips. Now, when this occurred, this was actually an area of interest that I was watching. So the reason that I had that zone marked up was that we actually had on the daily candle this supply candle that was left behind, and it created a liquidity grab and move pushed to the downside to take all of these equal lows and tapped into the weekly demand to then come back up. I was then targeting this area to see whether the market would sell out of this in a big way. And this is actually the only trade that I took this week. So when the market came up and tapped into that daily supply fair value gap, I was actually waiting to see on the lower time frame whether the market structure changes. So when we go down to the 15-minute, we can see the market comes, it rejects out of this zone, shows us rejection again, rejection again, rejection again. And then at this point, I wanted to actually see a lower time frame shift. On the 15-minute, we can see it occur. So we've got, higher high, lower high, higher high. This is a higher low there as well. And then the market fails to then push up again. Okay, so when it fails to push up here, we then see that it actually breaks structure. So it takes this higher low that was left behind, gets broken by this move. The market then comes up, rejects out of this zone, and does not then take highs again. Okay, so when I basically saw all of these rejection wicks in this area, this for me was confirmation enough for us to be selling. Okay, another confirmation that I used on this basis was, again, the magic 50%. Right, we can see 50% has been mitigated here. So effectively, if the market does not break above this level again, this is our defined area of stop loss. However, what happened is on the lower time frame, when we came into this zone, I was looking for reconfirmation of that move. So the higher time frame trade was quite a large one. I mean, if I wanted to, I could have kind of set the stop loss at this point here, 15 pips stop loss. I set it above the zone itself, 20 pips. And then when the market kind of showed again the rejection to the down from the upside, break of structure to the downside, it's taken these lows, it's come back, wicked up at Frankfurt Open, and it's actually taken a fair value gap that lies here. Okay, so when it's rejected out of that zone, this is where my entry was. I wanted to confirm that this bearish candle that was formed was actually the move to the downside. When this candle didn't kind of push up, with this volume that was created at Frankfurt, it should have continued to the upside. When it didn't do so, this was indication enough for me to actually take the trade. So this was one entry taken at 3 pip SL. And then when the market came down, it consolidated. It took these lows again at Asia, and then it continued to sell off. And I kind of took a second entry here. And effectively, that position was held. So we've got an intraday trade of 1 to 6.6.5 R, and this position was held until the end of this move down here, where I kind of closed at a 1 to 30. Okay, and I kind of projected on the 23rd, after this move had kind of occurred, that the week would end with a weekly candle as an indecision candle, and pretty much we're, pretty much there. So what we kind of want to see now happen next week is we want to see possibly a wick up into the 50% of this wick on the weekly candle to then sell down in a very aggressive way, because we've kind of had that setup already play out on the lower time frame. So we've got sells down, rejection to the upside, and we're hoping for this to continue to sell. Okay, do you have specific questions about that, or do you want to talk about other things as well? Yeah. Yeah. Mm-hmm. Mm-hmm. Yes. You're talking about this low that it broke? That's right. Yeah. So exactly. So basically what's happened here, we've got this is the last high that we want to see obviously continue to break for the trend to continue bullish now. Okay. As this is a very large wick, there's a lot of volume here that's been rejected out of. Okay. And then the following candles fail to continue that move, which shows us that above this point here, there is something holding price back. Okay. And it's actually an institutional seller that's holding price at this level that does not want it to push above this, because if it gets above this level, they're going to start basically losing their positions. Okay, so effectively, all of these candles that get formed here, this is the institutional seller sitting above this point, right, who is actually forcing the market down by placing sell orders. Okay, so this is a guy who's basically looking to sell, and they're feeding in sell orders to balance out or cancel the bullish pressure that's coming in. So all of these sales that we see, these are the bulls trying to push price up. The sellers basically feeding orders in to continue to cancel out their position to keep the price below a certain level. And as I said before, the 50% mitigation is a very, very good gauge on exactly whether that position has been filled. And we can see here, the market comes up, takes 50%, rejects out of the zone. Fine, it comes into an area of imbalance here where we do have a fair value gap getting filled. It even taps into the demand candle that kind of made the move to the upside and took, highs previously held possibly. Yeah, so it just basically fell into other areas of liquidity back here. So what we wanted to basically see was that this push that then continued, it should have come up and taken these highs. The fact that it didn't, it then shows that this is the wick that we need to kind of factor in. So this would then be the point that we want to see, does 50% of this wick get taken? Right, and we can see it gets taken once, twice, 3 times. This is also quite a textbook setup where you have 3 pushes into an area of interest and then the market rejects out of it. Okay, so this possibly on the lower time frame, without going into, I'm not an expert on Wyckoff, this is also a Wyckoff schematic where you have 3 pushes into the zone and then it rejects out deeply, comes down, breaks structure here to the downside where we've got lows getting taken, and then this large wick is actually the move that we look for. So effectively we've got rejection from the highs, it's consolidation, confirmation for moves to the downside, and this wick alone is this move that we need. So it comes back in, area of interest gets tested, and the market continues to sell. Okay, so that's exactly what's happened here on the 15-minute. If you go down to lower time frame, obviously it's a lot clearer, right? If we just, I didn't look at this on the 5-minute, but we'll have a look and see what it says. So here, this is the schematic that we were looking for, and this is what we get. So Highs get respected, a new high is not formed, lows are created, we wick up into the supply that kind of caused the break to the downside. This is the originating zone up here. So this is the originating supply, right? We tap into that and literally reject out of it. And the market continues to sell. And I think, unfortunately, this should have been a sell that I held long term. This higher time frame position on the 4 hour that I took is still one that's active. The lower time frame entries, they are basically cleared off. So I've taken these trades off. This is a position that's getting held because the market may well continue to sell into next week now. It's consolidating right now. So I didn't trade any of Wednesday, Thursday, Friday after I saw this happen. Yeah, I mean, look, like we said on the weekly candle, it's showing us an indecision candle. It's very clear. Then we now need to wait to see what the market decides to do before we kind of accept a bias. But when we go into the daily, we can see that we're already rejecting out of a fair value gap. Okay, so we've got break of the lows. Lows have been taken. Fine, we've tapped into a weekly demand here, but the market's kind of rejected out of this fair value gap. It may now be a case of seeing whether the market opens bullish early part of next week, because all of this price here has actually been covered. We can see the wicks are basically overlapping. We've got rejection to the downside. There's continuous price covering here. There's nothing really for the market to come down here for. If it's going to come down for anything, it's going to come and target these lows, or it's actually going to take the lows completely and continue bearish. So that's what we're looking at. But I mean, I'll kind of explain it a bit more in my forecast. Yeah. I'll stop the recording and then we'll have a chat about how your trading journey is going.